2, 3. Can everyone hear us?
Hello, hello.
All right. Excellent. So Chris and I are in Amsterdam.
We're hiding in the basement
of a hotel. All right. Sorry, we're running a little bit on the late side here. So I'm just going to do some screen sharing. Oh, wait a minute. Before I do that, one sec. Before I do that, just grabbing an article for the news piece. Today's going to be a quicker update.
I thought we were going to let Manny do the update.
Oh, that's right.
All right, Manny, what are the markets doing for us?
Oh, man. I don't really know.
He's like, dude, I've been partying for the last week.
All right. One sec here. Okay. All right. Do some screen sharing. Can everyone see my screen?
You guys all see the BTC daily charts? All right. I think we're good to go.
All right. Good to go. So I'm just going to hit the record and we're going to do an update. All right, folks, crypto market update. Happy Thursday. We're in Amsterdam hanging out in the basement lobby of a hotel. So we're going to make...
We got Manny, one of our OGs.
Yeah, he's been to...
He came in last year. He was at Austin for that.
Yeah, so he's like, he comes to these events on a serial basis. So,
Hi, guys.
And yeah, we're having a great time. Amsterdam's great. We'll do a quicker update today, but we'll make it to the point and so on and so forth. So let's get started. Looking at the Bitcoin charts. Can everyone see my chart? All right, excellent. So you can kind of see it seems to be forming a little bit of a triangle type formation, right? It's a little bit of a symmetrical triangle that's happening here. And it's probably going to shift. If it does break up higher, it'll probably shift into symmetrical, so on and so forth. But we do know that triangles tend to be consolidation, continuation patterns. Now, before I left on my trip, I did set some orders down around here, like around this resistance area right here. But I didn't quite make it down that low, so I didn't get any orders filled. And I was at a festival and I've been on an airplane and stuff, so I didn't have any time or whatnot to do any manual trades. So you never know. It might always make it down to that level. Anything's possible in the markets, but the major area that we'd be looking for is like a break of that, and obviously a break of resistance for some general continuation.
Yeah, and I'll just add, whenever we're in phase 2, which is what I say now, right? Like we had accumulation, and we had the first early signs of a breakout. So even though like 14,000 sounds high compared to where it is, or compared to where it was back in the spring, kind of the mentality that I take on this market cycle or this phase of the cycle is buying dips and breakouts until the trend fails, because as we saw in 2017, bull markets can go much further than seems rational. And so you have to think about that different from accumulation though, right? It's like whenever you're getting breakouts and dip buys, those are more like swing trading opportunities, not so much something that you're like, yeah, I want to go like all in at 14K and hold it forever. It's trade it a little more actively to accumulate USD that you can use to accumulate Bitcoin in earlier market cycles. So that's just kind of my philosophy there.
Yeah, absolutely. It's like every single time you're in a bull trend, because this bull trend has been fairly aggressive. We had a sideways range of accumulation. It was a little bit choppy, create a slight ascending triangle. We broke out of that, and then we just started trending up higher and higher, making higher lows and higher highs with some periods of consolidation. but you never know where it's going to top out. Now, when we were coming up here, it started to look parabolic until it makes a higher low. The instant it makes a higher low and wicks up, and you can kind of see these little hammer candles here, and retest and starts to create a triangle, suddenly something that looked like it was parabolic is now going sideways and becoming more healthy. It's consolidating it's having time to breathe, right? So you need those healthy corrections, and the more it can consolidate like that, the higher the probability on the breakout for it pushing up to another level. So if I were to just to, let's say, measure something like that, it's random, yeah, the 100% extension would be a retest of the all-time high. So if we did break out of this level, we're actually really percentage-wise, we're not that far away from the all-time high if we do break out.
Yeah, that's a good point. Yeah,
right. That's 43%. We've seen Bitcoin do that in like a day before a couple of days, depending on how much it rages. And so if it does consolidate, and this pattern could shift, maybe it could end up like something like this, or you never know, maybe it dips down lower, so on and so forth. It could even hit the lower targets and still create a larger consolidation pattern. So you never really know exactly like what the end result pattern is going to be.
Hey, Rob, can you measure the time from that and then also that? So the past two consolidations.
So this one right here?
Yeah, from that to like right there, but on that breakout. Like what's that time?
Oh, time-wise.
Yeah, sorry.
Oops.
Yeah, so if you just do
date range.
Yeah, so do it from that breakout to that breakout, and then that top to the next breakout.
All right, so we're looking at
curious if it's like speeding up
the consolidation
it's very similar.
Very similar, and it was really slow here, but so it does show that there is an acceleration because it really was slow at the bottom.
Yeah, and if you look at these as like the first two market structures, and then if we measure the second, like what would be the same as that or similar kind of?
So the same as that would be
put us about there.
Would take us to about here,
which is what end of the month.
The end of July.
And then right? If it did half of that, so do 20 days. That would like say we woke up tomorrow and like there was a big capitulation reversal candle, like a big green day on a breakout. Then I would say if like, and I don't think this is highly probable, but it's definitely a possibility. Like if can you guys hear me okay, by the way? I'm sitting off to the side. I just want to make sure. Okay, cool. Thanks, guys. So yeah, if it did like say a half of that time frame, 20 days or 3 weeks ish, and then we woke up tomorrow and there was like a big breakout candle, I would say that a parabolic move of that would be twice the size of this structure. So like what would twice the size of that be?
Twice the size of this structure right here.
Yeah.
We'll just add some distinction here.
Yeah. So yeah, stack it and then clone it. So a 1-to-1 would put us at. So that would be an all-time high break if it were parabolic. So that's kind of I would put this on the extreme bull side, right? Is a 2x move if you got a parabolic speed up of that price structure. Or if we did something where the consolidation actually lasted twice as long, so instead of like 40 days, 80 days, and then like a 50 or 60% breakout, something like that, that would actually be more sustainable for long term. If we did the parabolic move, that would be kind of nice for a quick trade, but like the more sustainable move, I think, would be a longer term consolidation with a 1-to-1 breakout. Or, a new extension. And, I bet a lot of those measurements would end up around the all-time high anyway. So
yeah, and if it did break out of this and make a move where it literally doubled the previous move, I believe that if it snapped up above 20K, like if it made a run to 20K, it would likely trap on the first breakout.
Yeah.
So you want to be careful on the first breakout because there would probably be like a little bit of a breakout fake out. And then strong selling as profit takers jump in.
Yep.
And then it would be probably like the secondary breakout that would lead to more sustainable breakout. But you never know, right? You never know in a parabolic market. So that's obviously the bull side of the scenario.
And one more thing I'll say on that bull side is look at the volume, right? So like your average volume back here was at this level, where on the second breakout, your average volume was growing, and then it's even grown more here. So I like that as far as market structure is concerned. Like, you know, Goldie asked, well, so where are some good entry levels? Well, I think, like Rocky was saying, he had limit buy orders kind of placed down there, and I think you were traveling around that time, maybe.
Yeah, I was on an airplane, and I was at a festival, and touring around Europe and stuff. So I just kind of like what I call set and forget. I have an area. I'm like, okay, if it drops that area, great. I'll get some nice fills out of what I think is a reasonable area for current price action.
Yep.
And if it doesn't, well, too bad, so sad. Wait for an opportunity elsewhere, right? You can't catch them all.
So yeah, and so in phase 2, which I consider we're in right now, the best type of trade setups are dip buys and breakouts. Right? Dip buys are nice because you get better risk to reward. Breakouts are nice because you have a very, very clear entry zone, and you can set your risk to reward. But obviously, the higher we go in the market cycle, the more risky things get, because you can get bigger percentage and dollar basis pullbacks. So you have to think about that with your size. Meaning, the bigger the volatility on a percentage and dollar basis, technically the lower your size could be, because you're risking bigger swings.
Yeah, for sure. Absolutely. And notice how this market, like the technical, regardless. So that's the bull side. And, in the bear side, obviously the bear side is the market could just decide to dump, right? Market can do that anytime. You never know, spoofy to bear well, so on and so forth. However, when we look at the actual market structure, this is a very clear technical definition of a bull trend. Higher lows and higher highs. It doesn't get simpler than that, right? In fact, it's kind of a lot of people underestimated the recent move, right? Like it's moved up quite nicely, right? You can see periods of consolidation.
Like I didn't expect it to go so quickly, but this market structure is showing that it's about a 3-week cycle, which could get shorter or longer, right? Which you want to consider both sides of that. But,
yeah, and even though the market structure and the principles are the same regardless of which market cycle you're in, you have that accumulation, and you break out the range, you go higher highs and higher lows. This time it's been a little bit faster. It accelerated up a little bit faster than the last cycle. We had 11 months of sideways before we actually started to break out. We broke out, and then it was followed by 6 months of consolidation. We broke out again, and then we had another 6 months of consolidation at a next level. So we really took the stairs up.
2016.
In 2016. Whereas, like the main difference with this seems to be the consolidation periods are a lot faster, and the reason for that, and what I believe, anyways, is because on the last cycle, like the previous cycle, the 2014 cycle, when we went up to all-time highs, 1,200 in 2014, it was still very much in the early adopter phase. It was still very much niche, right? There wasn't a lot of mainstream. Like we just started getting a taste of the mainstream in 2015. We started to kind of see it trickle in.
Mm-hmm.
Whereas like in 2017, things had actually accelerated, and we saw a lot more mainstream interest from retail. What was interesting in this market versus other markets is that usually you have the institutional investors who come in first, and then retail follows afterwards.
Yeah.
With crypto, it was like there was the early adopters, which and the people the meritocracy, people are really skilled into it. Then you had a lot of retail, and then the institutions are now seeing the opportunity from the last batch of retail, and they've been building infrastructure and investing for the next wave of retail, which is a push into full user adoption, into full mainstream. And that's the much bigger piece of the pie, right?
Yep.
Because 2017 was a taste of the mainstream potential, but we didn't hit market saturation by a long shot, right? That's not reflected necessarily in the market cap, in my opinion anyways. And if we wouldn't be seeing, on a fundamental level, we wouldn't be seeing all of the heavy investing that's happening amongst mainstream financial institutions and Fortune 500 companies that are.
Yeah, you want to pull that up, by the way? I think that's a good segue into kind of what's happening right now.
Yeah, so there's some other interesting news that broke, and Tezos was kind of mentioned this. I'm sure some people might have seen this, but basically Visa and Blockchain Capital and such, they backed this company called Anchorage on a Series B funding round. They raised a bunch of money, $57 million, and they're doing a custodial service. I think they're probably going to go toe-to-toe and compete with Coinbase Custody, which is kind of fun and interesting to watch competition amongst custodial services for institutional players.
Yeah. It shows they know the big money's here, and now they're competing for not retail traffic, but big boy traffic.
Exactly, right? They're competing for the big bucks. And the reason why custodial services are appealing to financial institutions is because someone else is taking on the security risk. And oftentimes, there's probably going to be insurance underlying these custodial services. I would imagine, right? If they're doing that, there's going to have some kind of underlying insurance platform. But one thing that was quite common that stuck out, and the reason why I point this out, is because we see the exact same narrative that we saw in the Coinbase custody, which is basically this thing that financial institutions want to be, like they said, wholesale cold storage will not meet the requirements of institutions dealing in crypto. The future, according to Monica, he said users want to be able to make voting decisions and governance decisions in various protocols like Maker and Tezos, for example. This is the second time we heard this. We heard this with the Coinbase custody. They chose Tezos because they're saying there's an appetite amongst institutions to be able to vote and have a sway, to be able to buy voting power to decide the fate of the protocol. Now think about that. These corporations, these companies, they're used to voting, right? They're used to being shareholders in various different companies and funds and so on and so forth, and having voting power and being able to decide the sway of the network or the company. When you look at Bitcoin, Ethereum, a lot of these other blockchains, there's really like a small subset of developers who kind of make a lot of the key influencing decisions. And there are no formal on-chain voting mechanisms to allow it to.
Oh, there we go. Can you guys hear us?
Can you guys hear us?
Oh, I think we're back.
All right. Sorry about
Cool.
that.
What was the last thing you guys heard Rocky say? How long were we out?
Oops.
Voting. Yeah. Okay. So cool. So I want to kind of propose like the idea of going back to 2015 when everybody was laughing at us, right? Including think about Visa and a lot of the institutional players. They were like, at first, they were like, oh, crypto's a scam. We're going to write it off, blah, blah, blah. And then it was like, nowadays, they're going, okay, this thing's not going away. It's here. We're afraid of it. And how do we participate in a way where we can have some control, right? So I think this is what is happening, right? They're looking to back crypto projects, even if they're completely decentralized, that they can buy enough of a stake in it to actually have some sway, right?
Exactly. And that way they'll be in a better position to protect their investments, right? Yeah. Because think about it this way. I'll give you an example. Take Ethereum, right? We had Ethereum Enterprise. We had a bunch of That was a bunch of financial institutions that were interested in Ethereum. But we saw examples of Ethereum, for example, just unilaterally making decisions, like during the DAO hack, for example, Vitalik and his developer friends decided that they were going to just hard fork the network and act as if the hack had never happened for the DAO hack. And that might have been kind of altruistic for the community, and we don't necessarily need to debate that, but it showed that the power and the influence was really in the hands of a few, even though it's decentralized, and even though miners could have rejected it and so on and so forth. There was no way for individual stakeholders, unless you're running a node, of course, but there's no way for individual coin holders to truly vote in a formal fashion to make that happen. It was kind of a step more decentralized, but it wasn't a fully decentralized decision-making process. Whereas if, a major company decides they want to buy 20% of all of coin or something like that, then it makes sense logically that because they've actually put a lot of money on the table, put a lot of skin in the game on that network, they should really have a larger vote, and there should be a formal process that's automated for that to happen, right? So I think that's kind of interesting. So that's what I think in relation to that.
Yeah, I mean, I know some people don't like the idea of like big corporations being involved in crypto, but like they really have three options. They can either, number one, lie down and die, which they're not going to do because they have shareholders and they're incentivized to not lose money, right? Number two, they could try to fight it, and they could try to like use crony capitalism to get crypto like banned, which I think they realize at this point is futile. It's not going to work. I mean, in some jurisdictions it might, but jurisdictions and governments that do that are ultimately going to lose long term. Or three, they could be like, all right, how do we join the party? How do we not get left behind? Okay, well, we can buy in and we can participate and we can help grow this in a way that obviously makes money for them, but incentivizes everybody else to make money. So I'm not opposed to getting behind projects that have big players.
Absolutely, especially if it benefits our bags, right?
Like, yeah, dude. Especially if, like they mentioned Tezos in the article, if Visa and other people look at Tezos as, okay, we're going to invest in this, and this is something we're going to help succeed. I want to ride that train.
Absolutely, because it can do everything Ethereum can do with formal verification, and there's a formal process for them to vote on protocol changes. So it's and those custodial services will make it easy for them. They don't have to manage all the technical details.
Yeah,
they could just invest. It can be insured. They give a fee or whatever, and then they can tell them what their vote is, and they'll allocate that vote accordingly.
Yep.
All right. So looking at other markets, so obviously, Bitcoin had a retrace. Altcoins took a little bit.
You want to talk about Ethereum? I'll just mention my trade real quick.
A nosedive. Sure. I'll just pass this over to you, and you can.
Yeah, I don't have my drawing tools here on Rocky's computer, but if you look at the trade alert that I just sent out. You'll see the trend line that I had marked up, and
do you want me to just pull up the trailer?
Yeah, you can pull up the chart from the trailer. Is that on the same thing? Can you guys see that screenshot of Ethereum with the arrows and stuff? That might be a different window.
No? Okay, one sec. All right, 1 second here.
It's tough working without two monitors.
Yeah. This is I'm on my little travel Mac. Everyone can see this, right?
Okay, can you guys see that? All right, cool. So basically, as you guys know, I bought the breakout here right below 200. Took a little bit of profit right here. And then I had some limits set up around this zone, but none of them got filled. And you can see, it only hung up around the 100% for a little bit. And the 61% has been a magnet for a few weeks now. And so, what was it, yesterday or the day before? My days are running together. But this week, closed more of the position at this point, just because I saw the potential for the 61 to hold as resistance again. And then, like I told you guys in the last alert, I was like, okay, if this breaks below the support zone, I'm just going to cut it off. It could definitely hold up somewhere around here and keep going. But I'm impatient with this thing at this point. Like, it's just trading scared. It's taken a lot longer than I wanted it to. So I'll be interested in future, long setups in this. But for now, just because there's so much bearishness with alts in general, and I think fundamentally Ethereum has a lot of potential selling pressure from ICOs that are going bust, that's a really hard kind of headwind to fight against, which is why on a percentage basis, Ethereum's been having such a hard time. And also, if we look at the ETH BTC chart, today we broke like multi-month support. Let's look at like a weekly chart here. What exchange is this, Rock?
It's up. It's
Okay.
Yeah, we just tagged.
Yeah, so you can. Man, I'm not used to maps. This is funny. You can see today we kind of broke below this support zone, multi-year support on the BTC chart. So this is just kind of a bearish sign for Ethereum right now. And, Bitcoin is kind of proven to be, as far as percentage gains, kind of the biggest mover of the past couple of months, where a lot of altcoins are either flat or struggling. And again, with Ethereum having so many ICOs tied to it, I'm just kind of bearish on it at the moment. So just cut it off and, made some money on it. Wasn't a massive trade by any means, but, hopefully you guys can see how being disciplined and following your plan is a really smart idea. And that's why I got out. So, we'll see what it does from here. Like I said, if we get other bullish setups, I'll take them. But, like we've said for the past year or so, guys, like we don't think that we're going to see another alt season like we saw in 2017. It's going to be different. We're going to be much more selective. We're looking at, either short-term trading opportunities that have, a lot going for it, or long-term investing strategies with projects that we think actually offer real long-term value, not just trying to trade everything because, people are throwing money at every single crypto project under the sun. I think 2017 was unique, and we just need to be more picky nowadays.
All right. So, Dogecoin. Interestingly enough, so I bought some Dogecoin because, everyone knows my rule of thumb is once it starts cracking below 30 Satoshis, I get interested, not necessarily knowing where the bottom is.
Yeah, it's kind of hard to time.
I bought my first entry at 29, and that was right before it got listed on Binance.
Nice.
Right? So like you don't, I didn't know it was going to get listed on Binance, of course. So it was kind of interesting timing like that, but then you don't really know how much effect that's going to have. So it did have a positive effect where it did pop up about 34%. However, the instant it got listed on Binance, it basically got market sold into, and there's some dumping, so that on the BTC chart, it just kind of retraced back down below 27. Now, this was a starter size position. I'd probably say 20% of what I want to put, what I would consider putting into this trade. This next block down here, like let's say under 23 Satoshis and maybe all the way down to 16 Satoshis or so, is where I'll be looking to add more to my position. It's just usually something that I generally do when Dogecoin goes down to that level. I've kind of been in the Doge market since the markets were created, actually since the end of 2013. So, obviously I'm positioned, like I have a max set position size of what I want to put into it. What I'm putting into it, the last bit of profit that I took on Bitcoin, I had taken some profit so I can buy some dips on stuff and trade it to increase my Bitcoin, as well as to make a little bit of USD profit on that as well. So this is my next kind of buy zone, and I'm really just going to kind of focus on this as far as like a midterm. So the first So I had two general profit targets this year. Not profit targets. I took profit twice, I should say. The first chunk of profit was, up in this region here, and I put that into the bank, right? And the second chunk of profit was just under 13, and I decided to keep this to put towards midterm trades. So, we talk about long-term capital buckets, midterm, short-term type of stuff. So midterm trades, and basically my plan is to multiply that money. It wasn't as much money as I pulled out here. What I put in the bank was more. So this is about a third of what I had cashed out here. That I just want to free up some capital to have on an exchange, because I didn't have any money sitting on the exchanges except for just a little bit on BitMEX. So I decided I want to free up some fiat, and obviously it's a lot easier to free up some fiat by selling a bit of Bitcoin than throwing it from a bank account. And because Bitcoin looked like it was kind of shooting up parabolic, I figured, this is also a good opportunity to take a little bit more profit off of the table, since the market is moving and developing a little quicker than I anticipated. Decided I need to take a little bit more. So now I'm just going to play a midterm game to see if I can multiply that profit by trading Doge, if I can. Basically my plan with that will be, let's say, I don't know, let's just say hypothetical. Let's say it comes all the way down here. So it comes all the way down, let's say to 16 Satoshi. Then suddenly I'll have an average fill, let's say we'll have an average fill like around here. And if it does a typical Doge move, comes up to the 100 Satoshi mark. This is usually I won't have my first target at 100. I'll have it somewhere in the 90s, just in case it falls a little short. So imagine, I get an average of,
it's a triple, basically.
Yeah, like a triple, right? Let's just say like 22, 23 Satoshis, because I'll go in much heavier if it goes lower. That could be a quick triple on the Bitcoin charts, on the BTC charts. Depending on where Bitcoin is, we don't quite know what that would translate into on the USD charts, but it'll definitely be in profit, of course. And if that were to happen, and so what I'll do is I will break that up. Let's see. I will break that up where I will take some out for tax. Some of the profit I will keep it for BTC, and some USD, and most
PRTY.
Yeah, actually, let me do this. Sorry. Let me do this.
Taxman gets paid first.
Tax USD. Okay, so this is it. I'm basically going to cash out some tax USD. A little bit of profit USD, and then probably about a quarter of a third of the profit will be in BTC. So I am gonna keep some of the profit on this. Once I figure out how much I owe for tax and all that crap, I'm gonna keep some profit in BTC just to kind of help replenish some of those coffers, right? Because I did sell some Bitcoin twice this year, and I also sold some holochain stuff. I won't be going, I'm not really going to be adding to my altcoin positions at all. Basically, if I make any profit off my altcoin positions, I will be locking in profit in USD, both some USD for tax, some USD just to lock in gains as good risk management into the bank to diversify in other things. And then some of that profit, now about a third, I will be keeping in Bitcoin, so that I can start to replenish my long-term, slowly start to add to my long-term BTC savings. So that's how I'm kind of looking at this kind of play in general, what I'm gunning for. We'll see if it happens. Obviously, there's never any guarantees. Just because Dogecoin has done this multiple times in the past, obviously doesn't mean it's going to happen. But, so far I've had pretty good, strike rate with Dogecoin in the since I started.
It's going to work until it doesn't.
It's going to work until it doesn't, right? I'm not going to not buy it below 30 Satoshi. I've waited so long. I mean, pretty much like all these dips here, even though those are nice little bounces.
Yeah.
It didn't follow my rules, so I just didn't buy it because it was very mid range, and even though it had little pops, I just I didn't buy it mid range. So it's one of those things where I'm a little bit patient.
When it's cyclical like that, you can afford to be very stingy on entries.
Exactly, and the thing is like worst comes to worst, if it flopped and completely failed, I position size accordingly. It's not going to break the bank, right? Like it's so you got to like figure out a position size. It could be a long ride. I mean, one example was when I was buying Doge, and through here I think I started the first entry was like I don't know something like 28, and then I went down to the lower 20s, and then I did one at 17 Satoshis, and there's a waiting period of over a month here, maybe even a couple of months before I saw some pay dirt, and then it broke up above 100 Satoshi. Was it here or here? Anyways, so one of these places, maybe it was here that did it. Then broke up above 100 Satoshis. John McAfee was shilling it, and then it started to crash. And as it was breaking down, I think I cashed out at like 96 or something like that. I closed at 96. So it was, anyways, somewhere like that on the last round. So that's Doge. We'll see what happens. I'm not in a rush. It's gonna do what it's gonna do.
Tezos?
Yeah, we'll look at Tezos. XTZ. It had a nice little pop. It did get added to KuCoin not too long ago, so it did pop a little bit, but it is looking a little bit heavy, right? Like you can see that. You could see that there's clear pivot highs type of thing, right?
Yeah, the question now, because it's mid-range, I feel like $1 is a magnet, right? So like when we got above it, you pull back to it. When you get below it, it kind of popped above it. But on that big green day, that's where the fundamental news came out.
Yes.
So
yeah.
So $1 is actually a very, very interesting price. Like if this puts in a lower high and then we get an extension to the low, it's going to be a retest of accumulation. But if say we get some kind of reversal around or below $1, like an inverse head and shoulders, that would be really interesting because that could be a much larger Fibonacci sequence to the upside. So basically right now it's like a coin flip in my opinion. It's like timing on these early coins is really, really difficult. And that's why patience, I think, is just so key.
Yeah, you can, it's consolidating. It's chopping around at a higher level, and it's just taking its time. It's taking a while, right? A lot of altcoins have actually taken a bit like a beating on the BTC charts.
Yeah,
pretty much all of them. So Tezos isn't special enough that it's going to buck the trend unless something seriously big and fundamentally changes, right? Like we see a lot of bullish news, early bullish news of institutional players and stuff being interested in it. But it's still very much in the early days. So unless there's like a massive catalyst that leads to a ton of buying pressure, where it can kind of buck the meta trend of altcoins.
Yep.
Right? Because when you have a strong meta trend in altcoins where, you have a big wave of altcoins kind of like bleeding out when Bitcoin, like based on Bitcoin correlation, there has to be a very, very, unless it's like a one-off, like we've seen Tezos have green days when everything else is red. A lot of altcoins will do that and kind of have their day where it will buck the trend or whatnot. But as far as like for a trending market, like a specific bull trending market, where it gets enough momentum to start breaking out and stuff, we need to see some serious like fundamental catalyst or like a breaking point where it leads to a lot of buying pressure and such. So it's a bit of a slow cooker. Obviously, portfolio manage and position size accordingly. Like I say, Bitcoin should always be like a decent size within one's portfolio, either number 1, 2, or 3 within the portfolio. As far as like position size, it should always be somewhere in that, at least in the top 3. Just to kind of balance and offset things, because it's usually Bitcoin's on a strong tear or altcoins are on a strong tear. And if you're in a bear trend, then obviously USD has to be kind of the top one. And that's it. I mean, we're going to do a shorter one today. I've got about batteries kind of running a bit low, so we're at 11%. So I'm just gonna look at the quick Q&A. And Gim's asking, what do you see as a possibility to resolve Tezos is declared security by the SEC? Can they, for example, force the development team to build KYC into the system, make it impossible to hold, redeem Tezos anonymously? How would this affect potential price action of Tezos if it was declared a security? Well, obviously, like if they declared anything a security, that would be bearish as far as like immediate market sentiment and panic selling, which crypto is very susceptible to quick overreactions and market sentiment.
No, crypto people panic. What are you talking about?
But the real to true test is like how decentralized it is. The more decentralized it is, the less like there's like de facto, is it truly decentralized? Like you could call a decentralized network anything, but if it's really decentralized, then it's hard to like pin it on any form of team or whatnot. And as projects evolve, I feel like in crypto and in blockchains, they can become more and more decentralized, right? So I know that their main goal has been decentralization, but what do you see as a possible result? So obviously the immediate result would be a market sell-off and a panic if the SEC said boo to any crypto project, there would be either whales like dumping to manipulate the markets or panic sellers or whatever, and that's just a part of crypto. That's what happens, right? Any kind of FUD or whatnot can do that. Long-term wise, it's the survivability around decentralization, and obviously governance wise, I think it because of its model and innovation, I think it has a good chance of becoming more and more decentralized. Does Doge have any real practical use other than to multiply your BTC? I mean, it's a fair launch proof of work blockchain, right? It's got low fees, fair launch proof of work. Piggybacks off of the Litecoin network as far as hashing power and double mining, and it's got good branding, right? And really, at the end of the day, fundamentals are community and what people are willing to trade. But as for me, as far as like a trader is concerned, my only utility for it is just to multiply some BTC, right? I mean, if someone, actually not my only utility, that's not true. If someone were to pay me and say, hey, I want to pay you some money for XYZ, if I don't own any Doge as an investment and I own Bitcoin or Tezos or something else as an investment, I'm going to say, hey, pay me in Doge, because if I sell it immediately, I'm not going to have any capital gains on that. Versus if I'm investing in something else, I'm going to have to pay capital gains. So that's like one of the main utilities for a lot of altcoins, in my opinion. It gives you different flavors to do that. So that's about it, folks. We're gonna wrap it up there, and I hope everyone has a great day. Cheers.
Yeah, so we're kicking off the Amsterdam seminar here in the morning. So we'll see you guys that are going to be here with us, and yeah, we'll see you in Discord, and we'll keep our eye on kind of this mid-range zone on Ethereum and the potential dip and or breakout potential on Bitcoin.
Cheers, folks.
Yeah, have a great night, guys, and we'll see you tomorrow.
Peace.
Take care.
All right. Cheers.